Good morning. Pretty calm after the crazies. We'll see what today brings. Charts are mixed, and we'll see how they develop, of course. Use your words, Karen. What does that mean, McGraw? Calm. Yeah, it's wild, man. Crazy yesterday. I mean, as the price action was a little nuts. It wasn't too bad, but I mean, everybody saw what happened there, and in the capital is just freaking insane. But it's kind of going to be a new world. We'll see what comes out of this. Let's hope it's not what appears to be potentially terrible. But okay, I guess we'll see how it unfolds. Anyway, so pretty calm here this morning. Charts, looking at different charts, like they're all over the place. Um, but that move up yesterday, just vertically up, and the move down that happened yesterday, all of a sudden, as the news unfolded, and then things came down. I had mentioned at the time that I had gotten a short off on the NQs as they started to drop, and I explained, it was a wide range bar, and so I started small, just because there was no place to put there was a place to put a stop, of course, but the momentum that began at that time was pretty big, so it continued down. And one of the things I said was, look, whatever's going on there, if the market is just dropping because people are attacking the capital, I said things are going to get under control and the market's going to go back up to the highs. And that's actually what happened overnight, as things calmed down. And it's like, okay, within the moment, nobody knows what craziness might actually happen. So people start hitting the bid. And then, all right, let's resume back what it was. And so this morning, looking at the Dow, was the most bullish chart. It was the one that was in a coma, as you can see, for a couple of months, just doing nothing. It breaks out yesterday. And so we got a wide range bar breaking out above a 2-month trading range. So it looks like we could get a 1, 2, 3 continuation pattern, potentially, but that's a lot of times what happens after a wide range bar, which is a momentum move. And there you see it, the momentum move that creates a void. And then you get the number 2 bar that builds a new launching pad to go higher. And that's the idea of concept behind a 1, 2, 3. Sometimes we get a 1, 2, 3, 4, which is just, okay, then another day of consolidation. The ideal situation on that pattern when it occurs is that it takes out the low of the inside bar intraday, and then it pops right back up again. That is the most high probability trading continuation pattern that I've seen ever, in 30 years. And 30 years ago, I didn't even know it existed, of course, but as long as I've been doing this, that continuation pattern is the most reliable continuation pattern that I know of, because it encompasses a igniting bar out of a consolidation. In this case, there's nothing above. It forms, like here, a base, and then it breaks down under the base, shaking out traders, and it comes right back up again. So we'll see if that happens. You could just get the 1, 2, 3, and tomorrow it goes up. Now, that being said, we always have 2 scenarios, right? Well, it encompasses a few scenarios, but wide range bar. If you've been here for a while, first thing we do is say, well, we know there can be wiggles. It should stay in the upper half of the wide range bar. Right. Ideally in the upper third. By no means did this go down below that wide range bar. And closing below it, sell. I'm not suggesting that's going to happen. But if it did happen and you got to close below that low, sell, short, call spreads, bearish debit spreads, buy a put, whatever. Again, we so far, and then looking at the Dow, Here we had this bar, and that suggested we go up, and it came all the way back down. This price action is crazy. Hey, and then, obviously what's going on is crazy. So I guess the price action clearly is a representation of the craziness. So that aspect, it's normal. But to get another bottoming tail bar, we've kind of got this widening range of volatility expansion. So, this chart looks great as far as its ability to go higher. We'll see. Kind of price action just kind of says, hey, anything's possible here, even though this looks good. Just always be open-minded. That's why we have two scenarios, of course. And as we go down and look at the other charts, it kind of reinforces the fact that you have to think that anything's possible. Like this beautiful pattern could fail. Why? Because we go and look at the NQs, which has been the leader, and tech, and until this cleans up, right? Because what we want, right, is everything to be firing on all cylinders. Meaning, if we're in a bullish market environment, we don't want to see what typically leads the bull market, technology, to be looking like it's going to roll over, which this obviously has been losing momentum. It hasn't recovered from this drop. It's holding so far, but it's wild and whippy. So we've got an inside day going on here. So it's just marking time. We've got today and tomorrow to see what the weekly looks like. So from the bullish point of view, looking at this weekly chart, historically, what would happen would be more consolidation. Whereas this bar that traded underneath, after an advance like this, would result in a little bit more back and filling before an ability to go up. And of course, this week's low, which will be last week's low next week, we'd want to see prices to stay above that and within this range. So for the moment, depending on what you look at, Dow looks like it's going to soar. The NASDAQ looks like it's going to be in a trading range until we get something else to suggest otherwise. And you can see pre-market here, it's just trading within yesterday's range and the overnight range, and it's getting tighter and going nowhere. The S&Ps doesn't look as good as the Dow. So trading inside here, come back from the holiday, and this thing moves up above this consolidation like it should have just took off, and then it failed and came down, like somebody threw a rock off the roof, and then it holds support and it marches back up again. This is insane. It's crazy kind of price action, as I said. So again, so far today, it's just a neutral day. It is going sideways at resistance. It's holding up there, so that's a positive. It's got a void below. So breaking below this area, it could easily fall rapidly, intraday a significant amount. It wouldn't really mean much unless we were to get a big red bar closing down here today. And quite honestly, if I saw that, as much as that big red bar would make me think prices are going to go lower, this market has to shake your confidence to some degree as to the probability of what historically is normal. Because obviously this isn't normal. So it's going to take some time for, I think, normalcy to come back and people see, what's the next shoe to drop here? Someone said to me, Greg, this thing with, Democrats and, looking for more money, this old thing that's been brought up in the past that they may tax every one of our trades. Well, if they add some tax to every trade that everybody's made, that's not good for the stock market. I mean, just another reinforcement of that they're out of control. with just looking for more taxes and spending more money versus the idea of smaller government. I don't know, but the charts are saying that there's a lot of uncertainty out there, and we need to see a contraction in these ranges as to, when you see contraction in ranges. I'm just looking at this here, the way this moved up, a bottoming, tail and a small body, and the ranges are about the same. This is a pattern where it communicates certainty about the direction of prices. In this case, they were going up. Now, when you start seeing gigantic tails and gigantic ranges with tails and overlapping bars, that's uncertainty. That's like people are like, what the hell is going on here? I don't know. So, patterns like this, just stay away. Stay away until it calms down. And intraday, things will set up. And individual stocks will set up. But right now, um, the world, obviously America, is uncertain about what's going to come. Russell, I resumed the move up. And so looking at the ETF, which we'll take a peek at, but that's a bullish chart. Pulling back as it did, I mean, a breakout failure creates uncertainty, and then it holds in that explosive move up yesterday. So same story, stay in the upper half, do not go back down there and close back down there, because then it's a breakout failure, and we're going to know what to do. Looking at the ETF, is where it was rolling over, and you had the pivot low. Right? Look to the left, pivot low, it held. And so, looking at this chart, not knowing anything's going on with the world, you would say, well, things got a little crazy, but this is okay. It came down to where support was in buyers, and it gapped up and it went, and it's got this little topping tail, so backing off at the end of the day. And right now just trading, 205-ish up at the top there, and we'll see how it unfolds. And bonds one lower. And we talked about this for 2 months. Which way is this going to go? And so this beginning to break lower, the same thing, we've got these breakout bars that are going higher, and prices better not come down. Well, if you want to be, looking for the bear case, well, let it come down, and then we're going to have, a lot of shorting opportunities here in the beginning of this year. But from the opposite effect of this forming a wide range bar down, right, it should need to keep going down and not flip. If it flips right back up again, that's going to be bearish. So part of what I wrote about in the weekend letter was the fundamental bullish underpinnings of this bull market and what we need to keep an eye on. And that is this chart and these yield curves, which are not super bullish because the market has been going up. Whereas, if the market was going down for a period of time and liquidity was being pumped in to where it was way up here, right, the spread, it takes time for that to come into the system. So, here is where things got a little shaky right before coronavirus, and there was the drop. So now these spreads are beginning to lift higher because yields are going up, bonds are going down, and that's bullish. And that's why financials are breaking out here. And, again, as long as long-term interest rates move lower, short-term interest rates stay where they are, and these spreads widen, that's the underpinnings of a bull market. And, that doesn't mean that there won't be corrections along the way, because there always are. But as long as these are here to moving up, that's a plus. And so this is kind of market internals. Their job is to, especially in situations like this, whether, it's uncertainty or whether things are really bearish, and for example, meaning things are very bearish and, markets are going down, and all of a sudden yield curves reach historic levels like this. And it says, look, as scary as things might look, as ugly as they may look, you better start looking for bottoms, because history tells us that that's what's going to happen. So even as, if you're thinking, okay, these Democrats are going to tax the hell out of us and do whatever, and that gives you a bearish bias, and I, of course, can understand that myself. As long as this keeps going up, there'll be a correction along the way, but there are going to be buyers where they're normally going to be on those dips. So these are the things that keep our personal opinions in check. And of course, looking at sentiment and breadth as we do on a regular basis each week. So then we take a look at oil. So if the economy is going to do okay, oil is going to go up, and it's moving up. Well, we've got yields going higher. We've got oil going up. Certain commodities started going up already. There's corn and soybeans and wheat. So all of those things suggest that this market can continue to go higher. Now, gold, it hit its resistance. And someone asked me just like the other day, should we buy in it? I said, because it's moved up nicely. We got this shakeout. I said, no, we don't buy at resistance after prices have moved like this. We're going to wait to see if this chops sideways here, and then we're going to buy it as it starts to move. And that's where it could make a very big move, assuming it doesn't come all the way back down again, of course. Silver is up here. I'm taking a long time here, but getting this out of the way. This looks good. And, even the transports, which were rolling over, came screaming back yesterday. So whether this is just a giant trading range now, but we shall see. But as we were looking at this and it broke down the middle of the wide range bar, it's now poked up above the middle of it. It's at resistance. Showed you all the crazy charts already. And we'll just see how this unfolds in the next few days and into next week. And we'll get a clearer picture of what's going on. All yours, Dan.
Good morning. Yeah, definitely historic news yesterday with that assault on the Capitol. Wow. I'm glad they got back in though and finished the job.
Well, they didn't quite finish the job, Dan.
Well,
Nancy threw Chuck down onto the floor while running into the bunker, and they just couldn't get to what they were after.
okay. But Trump is definitely under fire today. They're talking about, obviously embarrassment, and they're talking about impeaching him again, even with Republicans. So it's a big old shit show yesterday. I'm shocked the markets held up this well, and that markets just want to keep going up. It's nuts. I mean, this diamond's here, like I said, we're in it already in our ETF trader. But if we get a 1, 2, 3, looks fantastic. So all our opens are fine. We did put on a call spread on the Qs for next week, way up the 316. So it's our stop is all-time highs. Bullish gap up here, but nothing to do with it. Possibly, if it gets over the high of these two bars, we can roll it into a condor. But there's a lot of bullish charts out here. Let's look at some gappers. XNet 428. That's too sloppy for me. Solar, and so since the Senate in Georgia are full Dems now, they both won. I'm seeing some gaps here on these Biden type sector stories are continuing through, like TAN. So that Look at that, gapping up to 121. Yeah, Mara's on my list. Yeah, solar. Yeah, Mara's on my list. And you're chasing now is the problem. But so back to CSIQ is a solar. It's not too extended. And if you're wanting to get on board any of these things that we think have potential on bigger time frames, we got to find, now the monthly's extended, but the weekly's kind of a 1, 2, 3. So this one is not bad, but the problem is if we go through our trade checklist and then I say, oh, okay, so is the sector in alignment? Well, yes and no. It is in alignment. It's in an uptrend daily, weekly, monthly, but is a gap to 121 on a climactic sell setup? Does this short chart, the sector, does this support putting on a new trade in the sector? And the answer is no. I mean, not for a long-term trade. It's strong, but look at it getting far from the 20. I'd be in trail mode, but I'm just saying it's, not supporting it as if it were coming out of a base. Yeah, marijuana is gapping up too, exactly right. SPWR, don't like that one at all. I mean, that's gapping to a wall of resistance. I like CSIQ better. Yeah, we're in Tilray and ACB. CGC is another marijuana I've been watching, but the gap kind of messed it up yesterday, but the monthly is a 1, 2, 3. Sam, your drop down. Sam's asking about Riot. Yeah, Riot. Bitcoin's at all-time highs here again. Uh, part of the strength, obviously, in the market under the Dems is Hal's a 1, 2, 3. Yeah, that's going on the list. That's a 1, 2, 3 from consolidation. That looks great. But part of the reason of the market strength also the same old story of just record monetization. I heard some guy on the news say that 77% of all money in circulation was printed in the last 10 years. Wow, just think about that. But yeah, Hal as a new oil play, that looks fantastic. Putting that in a window. We're in a couple oils also. But also, the Dems don't care. Well, I don't want to politics. No side seems to care about the deficit. But at least our current Senate voted down the extra $2,000 and this and that because of fear of our debt. Whereas I don't see any fear whatsoever, and so I think the money spigots are just going to get bigger. GE, I don't know. I like your Hal better. DEC, Sam, no symbol there. McGraw, ARRY. Yeah, I like that one. I mean, it's gapping up to resistance, but yesterday was an igniting breakout bar. It's at the top of the range. I don't know. Watch it 30-minute high. IIPR. I don't see any pattern on that. We are in YOLO though, which is a marijuana ETF, and that beautiful. That's beautiful trade there. CSX for William. Yeah, that's kind of a unusually long bull flag. Flags usually are just like 1/3 the length of the flag pole, but nevertheless, it's bullish consolidation, breakdown failure. Yeah, that's going on the list. That looks good. And Diego GE wants to go long intraday. Yeah, maybe it's right here at resistance. So maybe 15-minute high. And whether you use 5, 10, 15, 30, 60, it's just a matter of how things are in agreement of how aggressive you want your entry to be. Disney, I don't see any pattern. It's just kind of in a tight little trading range there. Square, we looked at yesterday. Not bad, not bad at all. I like the pre-market here, Jake. The wide range bar, buy setup at yesterday's high. So maybe again, 15-minute high might be the ticket on that. DXC, that's a big gap. Yeah, I had that right here on my list. CVAC. CVAC was a bullish gap breakout, but to resistance. But look at the weekly now. So CVAC on any pullback into the gap might be okay. Cuervo, breakout to all-time highs. This looks great. This is Cuervo Gold. I don't do anything in the first 5 minutes. LI here, if it can go sideways a little bit more, I saw a number of these EV stocks perking as well as the battery sectors perking. If it could go sideways a little bit more, it's a reverse head and shoulders. This Jake, your RMO, set an alarm. I'm going to set an alarm at 22. That's in the battery sector, and you know it's making the turn right now. So over yesterday's high, I like RMO. It's lagging a bunch of others, but look at plug. I don't. That has to be news. That's a big old gap. Yeah, LI. Yeah, LI from that sector. No, I like LI. Maybe 15-minute high. It's not going to give us a right shoulder, and it's ready to break out. But I like the breakdown failure. Myrna here is on my list, bottom right. This looks great. This is I posted to our advisory, maybe 30-minute high, but maybe 5-minute high. But I like, the MT live we had called the turn, TURN. I got 1, 2, 3, 4, 5, 6 bars that made the turn and a gap breakout with a bullish weekly. This looks great. So it's a matter of, okay, let's go through the rest of our checklist. How aggressive do I want to get on board? It's 9:32. I think 5-minute high. This looks really good. So I got it in this window on the bottom right. Khaled likes Roku. That's right at resistance. I don't know. I like. It's right at resistance is the problem, but it is a bullish action so far. Chewy, yeah.